Today I'm asking that question, have we already hit the bottom or is the market going to go even lower? I'm doing a ridiculously fun and silly analysis of a stock market prediction based on a television show because of a great tweet that I saw late last week. Hey everybody, welcome back. My name is Levi Woods. This is an opinion channel only about money. I don't offer financial advice in any way, shape, or form. Now, if you're like me and you're paying attention to the market, it's been all over the place. We're down year to date. And a really interesting tweet came across my plate late last week. It was from Charlie Bilello. I hope I'm saying that name correctly. He's got way more followers than me, almost 400,000 over on Twitter. And this very interesting tweet came up with talking about CNBC's show, Turmoil in the Markets. Now, this is a special report that they run occasionally. And what Charlie was saying was that it's 100% indicator that a year from the time of the airing of the episode, 1 year later, the market's going to be up. And it has a 100% track record. And I thought, wow, this is ridiculously silly. And I kind of want to look at the data. And I want to know, who cares if the market goes up? I'm not worried about the market going up. That would be great. What I want to know is, can it predict if the market's going to go down a little bit further? And that's what I'm going to look at today. So let's jump into this spreadsheet. So let's take a look at the tweet information because I think it's pretty interesting. Basically, what he's saying is that this particular CNBC episode, Markets in Turmoil, when it played back in May 6th of 2010, 1 year later, the market was up 21%. And obviously since 2010, the market has gone up 367%. And he has gone through all of the air dates of the last 105 times that this Markets in Turmoil special has played. 100% of the time, 1 year later, there are positive returns on the market, sometimes big, sometimes small. The interesting thing about this, because I immediately looked at it and I went, well, you know, that's great, Charlie, but this special ran a ridiculously large amount of times in a very short period of time. If you look at this data, it ran 4 times in 2010, it ran 10 times in 2011, it only ran once in 2012. And then it skipped a couple of years, ran 5 times in 2015, only once in 2016, 5 times in 2018, twice in 2019, and then it played 77 times over a 101-day period in 2020, which we know obviously was a ridiculously volatile time. And now it's playing again just last week, May 5th of 2022. So what I wanted to know was, you know, this is all great. The average 1 year return is 40% according to this chart, but the reality is most of this data is from this one kind of chunk of time. So I thought, well, how about if we just kind of analyze these in little groups? Like what happens with the first time airing? If we look at that, what is the predictor that there's going to be a lower value and how long does it take to get to that lower value? That's something that might be interesting to me because it doesn't really matter if you're predicting or making an episode at the lows already. So in order to do this, I had to build a spreadsheet. Of course, it's super fun. If you're one of my patrons, you can download this spreadsheet in the month of May and you can play with it. It actually data tests any sort of stock you want. So you can put in whatever dates you like and whatever stock, and it'll pull up the information. It'll show you the drawdown and you can use it to analyze basically anything on any date. Starting at the top, you type in the stock symbols in column B. In this case, we're looking at SPX. In Google Sheets, that always gets entered as .INX. There's some examples of how you could enter different symbols if you like. It's telling us the current price per share is $4,123, and it shows us a historical share price based on the date that we enter in cell A4. Now, my spreadsheets are pretty simple. You just enter data into the white cells. In this case, what I've done is I've looked at Charlie's sheet and I've taken the first date from each grouping of time when the episode started airing. So May 6th of 2010, and you can see what it does is it pulls up this data, 1128, which is showing the same price, 1128. What it does then is it pulls all of the dates subsequently from that time to now. And then if you scroll down, it actually tells you the next time that there was a market low, which happened to be July 2nd, and it counts the number of days. So it says if the episode aired on March 6th, then the days to the next low were 57 days later. and then the percentage drop to that next low, 9.6%. It also shows the daily decrease, if we were just to do it on a linear form, of 0.16% per day. And it's pretty interesting. So if we look at all of the data, if we look at the next one, June 4th, let's see where that one took us. So the stock was trading at 1164 on June 4th, which was really only a month away. And the next date was July 2nd, 1022, which happened to be the same as the previous, the same low. So the episode aired and it says, well, 57 days later, we're going to see the low. Then it aired again. 28 days later, we're going to see the low. And when I analyzed all of these, I saw that there's it used to be a pretty good predictor, actually, 2 months. 28 days, we've got 22 days, 11 days. June 3rd was a bit funny. They actually just aired the episode on the lowest day of the year. The market never went down any lower from that. And then they didn't air it again until 2015. So in some ways you could say, well, this is actually a pretty good predictor that we're almost at market lows based on this information. Well, then they started to just have a terrible track record. They on August 23rd, they aired the episode. Well, we didn't see next lows for 172 days, for almost 6 months. Then they aired it again on January 18th, 24 days later. Then 2 years later, they aired the episode again and they were way off. I mean, they missed it by like 2 years. So they're basically saying, holy, there's turmoil in the market, but this is in no way, shape, or form an indicator that the market is going to go lower from that point. Likewise, in all of 2018 and back in February of 2020, obviously a really good predictor. Once the market was as volatile as it was and there was turmoil in the market, they predicted 28 days out. If you look at every single date that this aired, the markets go down 44% of the time, they go a bit lower. And 56% of the time they actually go higher before they air the next episode. So it's a pretty interesting analysis, pretty fun little thing for me to throw together on the weekend. And I just wanted to share it with you because I want us to all get rich together. And I'm really hoping that this airing of this episode is an indicator that we are very, very close to market bottoms, if not at the bottom, which I think is a pretty great place to be considering we're down so much this year.